Hello and welcome to the Exmoor Partners Brexit special webcast, where we'll be looking for clues ahead of the referendum on Thursday evening. The format of the webcast will be as follows. We will start with a brief summary of our House views ahead of the referendum. Then we will move on to some detailed technical analysis and a look at charts on the pound against the dollar, the pound against the euro against the dollar, and finally the FTSE 100. So we will be looking at some longer term perspectives, as you can see on this live chart, and then we'll also zoom in for you and be a little bit more interactive and look at some potential targets depending on whether we remain or we leave the EU. So we'll just zoom back out here for you and just start on a brief little synopsis of where we are to date. So let's get started. The referendum on whether we should leave the EU has been gathering increasing momentum over the last few weeks. And as more and more people become interested and more decide to vote where they had not previously been interested to do so. The ongoing debates by politicians have fueled the fire, and passion and conviction is certainly rising. From a pros and cons perspective, the Remain camp continue to use the damage to the economy as their primary weapon to try and convince voters to remain into what seems to be heading towards a United States of Europe. They are supported by so-called experts in the financial fields, quoting future black holes in the deficit and millions of jobs being at risk. Prime Minister David Cameron has repeatedly attempted to deceive the public by saying we will be cut off from Europe and giving the layman the impression that we will not be able to trade with the EU anymore, which of course is not true. Not only do the EU countries need our business, but we will also be at liberty to strike trade agreements with other faster growing economies around the world. The longer term economic prospects are better if you are in control of your own agreements on trade. However, Mr. Cameron has publicly admitted he is frustrated with EU leaders, but seems to be too afraid to be his own boss and clearly does not think the UK can stand on its own feet. This is not very befitting for the leader of a great country. The Leave camp have several weapons on the other hand. Firstly, despite the repeatedly contested figure of how much we pay into the EU, the fact is that we do pay a significant net amount every year running into the billions. Whether and how that money will actually filter through to our economy and public services if we leave, well, that's another matter altogether. Secondly, the immigration problem is certainly out of control. However, the distasteful manner in which they are portraying immigrants, something we would struggle to survive without the UK, is probably harming their case instead of doing good. Thirdly, Project Euro is failing, with the EU growth and unemployment levels being far from satisfactory, prompting individual economies to require bailouts and workers to migrate where the grass is greener, i.e. to the UK. With the current huge influx of migration into the EU only getting worse, it can only put further stress on the single market, which in turn will affect us more and more as members over the long term. The EU's plans to be ever more integrated is also a huge risk for our future, as laws and processes are not entirely in our own hands, and the UK cannot be a dynamic economy and react to its problems in an efficient manner that is in its best interest alone. The expression, "too many cooks spoil the broth," barely comes close to describing the problem, with so many countries trying to agree on so many things. The short-term ramifications of leaving the EU are solely based on uncertainty right now, and that is because no one actually knows what will happen if we leave. However, it is very clear through how financial markets have reacted to the polls over the last few weeks that the immediate move following a leave vote would be a weaker pound and weaker stock markets, and that is stock markets around the world. Of course, on a global scale, and a much larger concern is the contagion effect it could ignite amongst other member countries in the EU that are not happy either. But let's not jump the gun. The bookmakers have had Remain in favour from day one, and while the odds have narrowed in recent weeks, the move in the pound since last Thursday has been an incredible rally of some 700 pips, as the Remain camp seem to be inching once again and ahead. The markets are forward-looking, and a win for the Remain camp seems to be how the market has positioned itself right now, but nothing is guaranteed. Please note that throughout the night of the vote count, volatility will be at significantly heightened levels and liquidity will be thin as Europe, the largest trading bloc in terms of FX volume, will be asleep. Currency moves will be sharp and violent as every result from every region hits the wires, and extreme caution is warranted, and technical levels will mean very little on the night. So let's move on to the charts. Firstly, we're going to have a look at the pound against the US dollar. As I promised, we'll have a look at a bit of a longer term perspective here, and you can see that we've been in a downtrend really over the course of the last 2 years from the high of 171.90, and that can be seen with this descending red trend line and all these sets of significant lower highs. However, over the course of this year, we've got a technical basing pattern here called a head and shoulders. It's an inverted head and shoulders and could signal a change in the trend to the upside. It's a very irregular and ugly formation and not a clean one, and you can see that this is the left head, the left shoulder, the head and the right shoulder here, and you can see very clearly where price is stalling and stalling and stalling, sort of 147, 148 area, and I've drawn some lines for you here so you can identify the pattern and the breakout level, and you can see we've pinged off this level once again yesterday in trading, where price got up to about very close to 148, the figure. The trend channel moving to the upside has been sliced through, and we're straight back in there, and you can see these big candles here, which is a clear sign of the volatility that we have seen throughout the course of the last few weeks as poll after poll come out and the favor changes from leave to remain. It's been extremely difficult trading conditions, and it's not about to get any easier. The technical levels that we are looking at, and I've identified them with circles, and you could call these potential targets depending on whether we remain in or we leave, are as follows. I'm looking at a remain win target, initial target, and I think we'll probably get there quite comfortably, of around 151, 151 and a half. That is the top of the trend channel here. And if I zoom out for you, we look at some Fibonacci levels on the longer term move and the medium term move, and both the 38.2 retracement and the 61.8 retracement of these two moves both come in at very similar levels here, and that's around a fraction over 151. So this is the first target we're looking at, and I've marked it with an in sign. So if we remain in, this is where we're aiming at firstly, and quite quickly, I would assume. And probably if you take the on a more technical basis, the sort of height of the head to the neckline of the head and shoulders, inverted head and shoulders formation, you're probably looking at a target of around 155, 156, where we would potentially look to reassess. So 155 is also the 50% retracement of this whole move to the downside. Now, just one thing, a word of caution I want to bring to you here. I've also highlighted the Scottish referendum price action here, and I'm going to just zoom in there for you a little bit more, and you can see we were before the referendum, we got down to as low as 160, and literally on the day of the referendum, once we knew that Scotland were not leaving, that was the high in the market. So that is a classic in the market terminology: buy the rumor, sell the fact. So what's happened over the course of the last 3 days here is you can see that the market is clearly positioned for a remain win, and we could see continued upside, but you want to reassess price action around here, because if we get up to this level, we would be up about 1,000 pips. That's a 7% move in the pound approximately. And that's quite a move for a currency pair. However, markets are always going to go further than they should, and especially if liquidity is thin, and we could even take out this level. But I would say remain win, we're comfortably looking at this target and quite possibly 155, 156. However, if we do leave, then there is no one that can tell you just how far we might drop, but I would look for an initial move down to break the recent lows of 2016, which are 130, just above 138, about 138.30. And that could happen very, very quickly. That was the low after the weekend when Boris Johnson declared that he was in the leave camp. Below that, I'm going to zoom out much further here, and this was the low in the financial crisis here. The 135 the figure, and analysts are forecasting a 15 to 20% drop in the pound, and that would certainly be taking that out as well. So both of these are well, the first 138 is definitely an achievable target, and quite possibly very quickly, i.e. within a day or two. And then we'll see assess price action down here if we get to 135, which most people assume we will be doing so if we leave. So very quick recap, if we leave, we're looking at a potential test of 138 very quickly, i.e. within a day or two, and then an eventual test of the multi-year lows at 135 the figure. To the upside, first target's 151.5, and just above the psychological 150 handle, and then potentially an extension of around 155, 156, and then to reassess. So now we'll move on to the sterling against the euro chart. We've had a nice uptrend since the peak of the financial crisis, where we almost got to parity. We got to 1.02 approximately, and then ever since then the pound has been appreciating against the euro, especially over the course of the last couple of years when the ECB have embarked on a QE program, getting up to a high of about 144 here. And then we've had a lot of sideways movement, albeit in quite a big range. And then once we took out these lows, we've continued quite aggressively to the downside, and the majority of that has been as a result of the nerves surrounding the EU referendum vote, which we've got tomorrow. So looking at a more sort of short-term perspective, we've had this trend channel to the upside. We've sliced through the trend channel and all the way back up with all the volatility and all the poles. And I would expect that if we remain in, if the vote is to remain, I'm looking at a target of about 135, probably somewhere just above the trend channel. And if I zoom out for you again, on a technical perspective, you've got previous lows and previous support levels which are broken, which in turn on a retest to the upside normally turn into resistance levels. So this is the zone I'm looking at for an in vote. That the 200-day moving average is coming in about 132.28, and I would expect that to be taken out, and I would expect to move up to sort of 135 area, 135.5, where also the 61.8 retracement of this whole leg down sits. That's the move from 143 down to 123, a big 20 big figures there. So 61.8 retracement right there. This is the zone I'm targeting. If we stay, I'm going to zoom out for you again. If we leave, we will be looking at a potential break of this longer term trend line. So a break, and we take out the lows at 123, and then potentially, and don't forget, leaving the EU is not good for the euro as well. So whilst the euro sterling or sterling euro, however way you look at it, the pound will depreciate against the euro, or is expected to depreciate against the euro, as we have seen as the polls have been coming out recently. The euro is not going to benefit as much. So on a pip move, we'd look for the pound against the dollar to be moving more versus the pound against the euro. However, we would expect this level to be taken out, and potentially could look for a move down to somewhere between the 61.8 retracement level and these lows here. So somewhere between 115 and 118 would be a target there. So quick recap, if we leave, we're targeting 116 to 118. That's sort of 1400 points below where we're currently trading, with confirmation on a break of 123 that this move is going to continue lower. To the upside, if we remain, zoom back in for you, we're targeting at least a move up to 135, 136. Let's have a look at the euro dollar. So again, long-term chart here, and what we've got is the financial crisis, just before the financial crisis, double 160 peak there, and ever since then we've been making lower highs and in a downtrend. This is courtesy of Mario Draghi, and the rest of the move is courtesy of the anticipation of the QE program, which we're now in. And since then, we've been trying to form a base here in euro dollar. Just zoom in there for you. We've had trend channel up, break up to test the trend channel, broken previous support, new resistance, and down again, and we're up again. But really, if the vote is to leave, we're expecting a break of the moving average, the 200-day moving average on euro dollar, which is coming in around 111, and at least a target of 108, the figure, because as I said, it's not good for the eurozone either if the UK leave. To the upside, you're potentially going to get a sympathy move, and really it's a bit more of a tricky situation here with euro, trying to forecast where that's going. The pound is going to be a lot clearer, but move to the upside on a technical perspective. Really, this sort of 117 area is critical medium to long-term resistance, and if we take that out, which I probably don't expect would happen, I would still expect to find good resistance should we get up there. Based on a Remain vote, I would expect good resistance to be coming in at this level, and until we take that out, I'm looking at trend line as support, 200-day moving average on any retracements, but that's assuming that we remain. If we leave, then I'm expecting the 200-day moving average to be taken out and potentially look for a move down to 108. Finally, the FTSE 100. This is we'll start with longer term, and it's very interesting to see that we made an all-time high back in '99 and only managed to just pip it back here in 2015 before we have seen a considerable amount of volatility over the course of the last sort of 6 to 8 months. And if you compare it with other markets like the Dow Jones or the S&P or the DAX, they had made incredible new all-time highs, where the FTSE really has underperformed. But let's have a look at the technicals. Since then, we've been chopping up and down, pretty ugly chart. We've got a bit of a formation here that we're looking at, which is a type of wedge formation. But in terms of what we can expect, I would look for a Remain win to be targeting a move up to 64.50, 6500. These are the previous highs that we've seen, and the 61.8 retracement, and then we'll reassess and potentially reality of the status quo that we are in will kick back in, and then we'll start thinking about the sluggish economic numbers, and the fact that interest rates are going nowhere for the immediate future, etc., and then possibly buy the rumor, sell the fact type of scenario. But we are potentially aiming at 6450, 6500, where we will look to reassess if the Remain camp win. To the downside, I'm looking, if we leave, I'm looking for a strong conviction test of 58.50 and a potential move down to the 5500 area. And I'm going to zoom out for you. I've drawn a line here which dates back 6 years, just sort of identifying and connecting those lows. And this is potentially the target that I'm looking at, where we could move to down, and that'll be a good 10-11% move. It'll be 700 points from where we're currently trading at 62.73 on these live charts at the moment. And then we'll reassess from there. And no doubt the government officials, the Bank of England, etc., will be trying to calm the markets and trying to basically bring out the tools in their toolbox. whether that be verbal or physical. So there you go. So quick recap on the FTSE. This is the target on a remain win at least, probably around 6,500. If we leave and a break, we'd look for a quick test of 5,800, very quick test, and an initial target of sort of 5,500 with potentially sort of 52, 53 in extension down to the bottom of the wedge formation that we have here. So that's it. Just remember the status quo. You know, markets are going to move. It's going to be very erratic and very wild. And good luck with your trading. We hope you've enjoyed the video. And if you're not yet a client and would like to become one or require any further information about our services, then please call London on +44 203 773 7100 and quote Brexit special for our enhanced pricing. Best of luck on this historic event.